Okay, hi, my name is Brian Leni. I'm the editor of Junior Stock Review Premium, which is an investment newsletter focused on the junior resource sector. With me today, I have Martin Turenne, CEO of FPX Nickel Corp. Today, we'll be discussing FPX's most recent news release, some commentary on the nickel market, and finally, what's in store for FPX in 2021. So the first question, a major paradigm shift is underway worldwide as we move away from fossil fuels towards greener alternatives for electricity generation. In the mining sector, the shift is being reflected in share prices of companies who are producing, developing, and exploring for battery metals. Further, if you recall Elon Musk's comments from last summer, and I quote, Tesla will give a giant contract for a long period of time if you mine nickel efficiently and in an environmentally sensitive way. So now to focus on today's chat, FPX just released some great news in regards to their potential carbon footprint and how it ranks in comparison to other nickel mines worldwide. Martin, can you please give us some more details on the news?
Yeah, sure. Thanks, Brian. It's nice to see you again. So, we've been thinking for a while in advancing this project. The main focus for these types of mining projects is always your cost of production. What's it going to cost you from a capital and operating cost standpoint to actually produce the commodity in question, which for us obviously is nickel. I think a bigger theme that's starting to emerge in the space is not just where you sit on the cost curve, and hopefully you sit low on the cost curve, and our PEA shows that, but where you sit on the carbon curve. And as we go forward, I think that there's going to be, as you say, there is a paradigm shift underway that companies or miners that produce at the high end of the carbon curve, they may be shut out of end markets. It's interesting. There was news out of the EU and European Union last month, whereby they're going to start to impose limits for any EV batteries in years to come that will require the EV batteries producers to certify what the carbon emissions are associated with the production of those EV batteries, including carbon emissions of the carbon footprint of the metals that go in those batteries. And above some certain threshold, you simply will not be able to sell those batteries in the EU. And that's a dramatic paradigm shift, and it's going to impact how mining companies and refined metal producers can actually sell into markets, what markets they can or can't sell into. So we have a news release out this week describing the carbon intensity of our nickel production envisioned at our project. And so I'll share my screen now, and we can see where we believe that nickel from the Baptiste deposit or from the Baptiste Project would sit on that carbon intensity or carbon curve, really down to the left-hand side. So the way to read this is that for every ton of nickel that we would produce in our refined product, we would have emissions of 2.4 tons of carbon dioxide. That's based on the mine plan and the processing facilities we have scoped out in our recent PEA. And you can see that the other different types of nickel production currently globally are significantly higher than that, up to almost 35 times that for nickel pig iron, coming out of places like China and Indonesia, which are heavily reliant on coal-fired power plants. But even class 1 nickel coming from sulfide ore at just over 7 tons of CO2 per ton of nickel produced, they're actually relatively high on this carbon emission scale compared to where we are. This slide simply shows that how that number gets built up between the carbon emissions attributable to the mining, how much is attributable to actually mining, to processing and concentrating, producing a concentrate, and then beyond that, what's attributable to smelting. Now, the important thing about Baptiste and FPX's project that allows it to sit on the low end of the carbon curve is the fact that our product doesn't need to go to a smelter. So the product that we would produce could go directly either to a stainless steel producer or into the EV battery supply chain. And by skipping that smelting stage, not only is that positive from an economic standpoint, but there's also, we're not having to incur those carbon emissions to actually smelt our product.
Excellent. And that's a great lead in. Last September, you released an update on your PEA for the Baptiste project. The results were great. They were highlighted by a few things, a great NPV upwards, after-tax NPV of upwards $2 billion US, long mine life, 35 years. And arguably the most important point, as you kind of touched on earlier, you're in that first quartile of cash costs with an all-in sustaining cash cost around $3 per pound nickel. These are great points. but this is really just the tip of the iceberg. Can you further summarize the results from the PEA and highlight some factors that you think separates FPX from some of the other junior nickel companies out there?
Sure. Yeah, happy to. So I guess, yeah, first and foremost, where do you sit on the cost curve? So at 274 a pound, you can see that we would sit sort of in a very favorable place, as you mentioned, and that's important. We know the nickel price is highly volatile, and so if you have this positioning, you probably have margin protection throughout that entire life of mine. You know, again, to your point, a very long life of mine is important here. Nickel tends to be a market where only large companies tend to play, and large companies by their nature tend to want large projects, both in terms of annual production and in terms of mine life. So 35 years, we would have a very long mine life project. We'd be looking to produce about 100 million pounds of nickel per year over that time, which would make this one of the 10 largest nickel mines by annual production in the world. So those are some of the key factors driving, I think, what could make this project of interest to major companies. Another way to look at this in comparison to other nickel projects in the marketplace is what we call the strategic value index. This is the ratio of mine life to payback. So you take the mine life, you know, in any mining project, you'd want ideally the longest possible mine life and the shortest possible payback. So this ratio that divides mine life by payback, to get that ratio really shows the strategic value of Baptiste. That long mine life is also underpinned by quite an efficient payback. And you can see, compared to some other nickel projects held by juniors out there, that we rank kind of very favorably on that scale. And again, we think this is something that fundamentally differentiates us, particularly as it regards garnering interest from major mining companies.
Very good. The nickel price has been particularly strong to start the year, you know, breaking the $8 per pound mark. This is a key level. And besides a blip in the fall of 2019, we haven't seen a price above $8 in a while. In your view, what is driving the nickel price? And the big question, will it be sustainable in 2021?
Yeah, good question. So I think, you know, nickel, along with copper and zinc, have had great moves since the bottom in sort of the March-April period when COVID was really hitting the markets. And that's really been driven by China, by and large, strong Chinese recovery, translating to strong demand for these metals. You know, going forward, the key question, I think, is where will nickel be from a supply-demand standpoint in 2021? So from the years 2016 to 2019 inclusive, the nickel market was in deficit. So it was apparent that nickel was in the midst of a long-term deficit or undersupply condition. And that there was then a hiccup in 2020, and that given the decline in global GDP growth with the pandemic, the nickel market actually switched into surplus. So the nickel market was oversupplied next year. This week, Morgan Stanley has come out with some research suggesting they think the nickel market will switch back into a deficit this year and in future years. So we're in a situation where nickel is in a position of long-term structural shortfall, which suggests the price needs to be maintained at an incentive level to incentivize new production. And more importantly, it suggests the world needs to start thinking about building new nickel mines. And so who are the companies with the projects that can conceivably, you know, come into production in the next generation? And that's where we think FPX and our Baptiste deposit sits.
Great. You know, finally, to end, what do you have planned for FPX in 2021?
Yeah, great. So there's three main things we'd like to have people be focused on. One is continued work on carbon intensity and carbon sequestration. So we've put out results now that show that we have very low carbon intensity for our nickel produced. That doesn't include any credits for any potential carbon sequestration, any sequestration of carbon that we envision are possible within our tailings. So we have ongoing research with the University of British Columbia on this theme. And we'll have news over the next couple of months on some first ever field testing to actually demonstrate and quantify how much carbon we think we can sequester at our project, which could potentially lead this project to being a net neutral or a zero carbon footprint project, or potentially even a net carbon sink. So people can look for news on that. They can also look for news on expanded metallurgical test programs. So we've done good PEA style or PEA level metallurgical testing to support the recent study. We're now moving into PFS level or pre-feasibility study level metallurgical test work. one of the outcomes of that could potentially be the production of nickel products for the EV battery market on a sample basis, as well as potentially cobalt products. People can look for that. And the third piece that I'm personally most excited about is drilling that we'd like to do at what we call our van target. So the overall project at Dakar, again, I'll just share my screen here, covers a very large footprint, around 245 square kilometers. Within that, the Baptiste deposit is one of the largest nickel deposits in the world, and that's what supports the recent PEA. 6 kilometers away from Baptiste, within the same land package at Dakar, is something we call the van target. The van target is actually a larger scale target than Baptiste. It has a footprint of outcropping nickel mineralization that's almost 3 square kilometers in size, whereas the Baptiste footprint is around 2.5 square kilometers. And the grades we see at surface at Van are actually quite a bit higher than they are at Baptiste. So Baptiste, with a PEA, I think we've demonstrated as one of the leading large-scale nickel projects in the world. And we see the potential for a brand new discovery this summer at the Van target, and so we're excited to have an initial drill program there this summer to understand what we have there, to see if there's a potential for another Baptiste scale deposit, and hopefully potentially something that's larger and or higher grade.
Nice. That's great. Very good. That's a great summary of the news release and some of those really important high points for investors, going into 2021. For Junior Stockbroker Premium subscribers, they benefit greatly over the last year with FPX, being, at its high, an 800% gain for subscribers. And for me, I see a lot of potential moving into 2021. And thank you very much for being with me today.
Thanks, Brian. It's always great to chat. Take care.